Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the anticipation around the US inflation numbers, it'll start to get on fever pitch as we go through the Asian into the European session and then waiting for those numbers to drop. Now, just before that, we do have the ECB interest rate decision. Now, no change of rates expected. Okay, so just be aware, like looking at the data that is coming out, right? It's going to make a lot of sense that euro against the US dollar is going to be in play. But what we need opposing sort of news or data, right? So the big, like all the US numbers over the last week have been coming in weaker, right? PPI numbers softer yesterday, employment numbers the week last Friday softer. So there's a lot of build up. Now, if you come in and have a look at the numbers, we are expecting a slightly stronger number than the previous month, right? 2.7 the previous month, and the range 2.7 to 3.1. So this is the key to it, right? Understanding the range will tell us a lot about how far it's going to move. But with that anticipation, right, if the number comes out as expected or weaker, right, we've already got all the weaker numbers. The market is factoring in more cuts from the Fed. That is going to be dollar bearish, right? So just to remember, as expected or weaker is our best opportunity. In actual fact, below 2.7 really confirms the dollar is done for now. The Fed will be lining up to do more cuts, right? But you know what? This is the thing, right? A number below 2.7, we could get excessive volatility. And that's really not your friend, especially on that entry level. So that's going to be key. Like ideally, to me, a number at 2.7 or 2.8 is going to be great. It gives us a trading opportunity that goes with the current market, right? And you can see very clearly, well, euro actually is behaving like, the ECB is going to be, dovish, right? Actually, let me just come back to that for 1 second because there's a sequence of the numbers here that you need to be aware of. Okay, so you're looking at we get the ECB interest rate decision, right? No change, so nothing should really happen. Then we get the US inflation numbers, right? Then after that, we have the ECB press conference. Now, this is where euro is going to move. Now, if we get weaker numbers, right? I'm really focusing on weaker numbers. I think that's where the cash is because that's where the current trends are, and I'll show you that in a second. So if we get weaker US inflation numbers, and then we get a say a dovish ECB, like we're going to potentially cut rates further. Well, that's going to like neutralize euro. Okay. On the other hand, if the ECB didn't say they were going to be keeping the door open, and don't forget, we've got a fragile sort of political situation in Europe with France and etc. So I just can't see them not being a little bit dovish, right? So I don't think euro is the trade you want to be on, right? And just to highlight that, right? So the benefit of having a service like Metastock, and I'm not here to plug Metastock for anything else except it's a good service because this is where you can find out things. ECB to hold rates again, but keep door ajar to further easing. Now, some of the journos out there, they're talking to these guys for 10, 20 years. So they're friends. So the ECB or the central banks like to get a bit of the message out there, right? So I wouldn't be surprised if this message has come from within the ECB just to sort of cool the market down a bit. So if we get that, sort of dovish outlook from the Fed, then that's going to create like discombobulation on the euro, and euro's not going to go far at all, right? So, and just looking at these numbers, okay, 2.9 is the forecast for the CPI, 2.7 to 3.1. But if you have a look here, the ECB press conference, right, it's 15 minutes after the CPI numbers. So we've got a couple of trading opportunities here. So to me, you could be trading euro initially, right? But they're not going to cut. They're going to cut rates. There's going to be a statement with the ECB up here as well, right? So that's coming out. 15 minutes later, we get the US CPI numbers. Then 15 minutes after that, we get the press conference. So it's a 1, 2, 3 punch, right? To me, it's easier to be focusing on instruments that are sort of already rocking to the top side, right? Once again, I'm loading up for the top side. We've got technical levels here. Aussie, as I sort of said yesterday, was going to be a good pair to be on. I got a little bit sidetracked watching Chinese CPI numbers, but Aussie and Kiwi both performed, right? And Kiwi sort of back in the zone here, right? So this is where the action is. And so what do you do today? Well, just get organized. And what I mean by that is draw your trend lines, know exactly where that pressure point is, where the Aussie is going to have support, right? If we got stronger US CPI numbers, well, then all of these trading opportunities are blown out. But, I'm quite optimistic. So we've got like this support trend line lines up with the bull bear pivot line. It's on the lower side of momentum. So I don't know if that's going to be down there by the time we get to the US numbers, but it all points to the Aussie. We wake up, we get US CPI numbers at 2.8, 2.7. This will be above 67, right? 67 and a half. That's what I'm sort of looking for, right? And if you're looking for how far the numbers are going to go, it comes down to two things, right? Once again, those traders that are a bit more experienced will understand if the number is below expectations, then it's going to run a lot further, right? So that's why the range is super important to the whole opportunity, right? And then you need to have a look at your daily charts and see where the next levels are up here. Because at the moment, right, if I just blow the Aussie up and it's got a really good setup, okay, it's just above the previous high. You're not drawing a trend line from here to here. That doesn't work because it's not a trend line, right? There is blue skies for the Aussie to go up, okay? I think that's going to be a pretty awesome opportunity, right? And you want to be doing this across the rest of the major pairs too, because if you look at sterling, right, we've also got I would say a horizontal support trend line, okay? And if I just go here, right, it hasn't been above this level since July, right? So to me, it's like a bull to a red rag. It's on for young and old here. We just need the numbers, right? This is the thing, and this is all trading is. As an experienced trader, right, you know what to do. It's about getting the numbers to line up for us, so they actually make the trade happen, and that's what we're looking for. So euro, okay, a little bit convoluted, maybe dollar Swiss, but to me, sterling and Aussie are prime. If you like the Kiwi and you're in New Zealand, well, that's going to go with the Aussie as well. But sterling and Aussie, to me, look like the two best pairs. We just need weaker numbers, and it's showtime, right? So that's where we are. I'll try and cover a few more things as we get closer. Just having a look across the news, okay, it's all anticipation on the Fed, right? The numbers have been coming out weaker. It's just designer. This is like a designer number that we are looking for some major activity around. All right. So not much to do in the meantime before that. If anything, I'd say range bound markets in the lead up to the numbers. I'll be looking for technical levels to get in on the US numbers. And let's just see how this plays out, because I'm pretty pumped, as you can sort of hear in my voice. This is like weaker. You just got to understand what weaker US numbers do for us. It gives us a trending US dollar potentially for the rest of the year, the next 3 months. Now, that doesn't mean it just falls 500 points in one go. No, it'll go down 100, come back sort of 30, then go another 50, 70. Like, we're just going to have a consistent down move on the dollar, and that is where we make money, right? And just on that side of things, just sort of mentally prepare yourself. If the number comes out around 3.1, right, I don't think it's not going to change the picture of what the Fed are doing in September, but it will kibosh a lot of the nice setups that we currently have. It'll stall things. I think the dollar will still creep lower, but we're not going to get the perfect move like what is sort of lining up for us at the moment. All right. So just as you go through the day, I mean, have a look at the live signals, and in particular, well, you don't have to look too far because you'll be looking at your charts, but you'll see that all the major currency pairs are lining up. That's sterling, Aussie, are lining up for a dollar weakness, right? Now, if you're a contrarian, well, then focus on strong numbers, right? But if you're wishful, hopeful, optimistic like me, let's get some weaker numbers in. Let's get these trades on and go from there. All right, guys, have a good one. Pretty exciting times, especially as we come through that European session. As I said, starting with the ECB, it's going to be pretty exciting to sort of watch. This is like for traders, this is our sport, right? The CPI numbers, it's showtime. All right, guys, have a good one. All the best. Cheerio.